Even if you don't do your own taxes, I want you to know the difference between the standard deduction and itemized deductions. Let's talk about that. What both of these deductions do is lower your adjusted gross income, so you pay a lower overall tax base on federal taxes. The standard deduction is a fixed amount each year. Single, married, head of household, all those have different amounts specifically, but it is a fixed amount that most people take that lowers your income at the federal level for tax purposes. Instead of taking a fixed amount, some people use itemized deductions if they have more deductions than what the fixed amount is. And we're gonna look at a few of those deductions and what they are right now. So the first one here, state and local taxes, SALT tax, this actually just went up with the new tax bill. So if you have more than actually $40,000 of taxes there, you can deduct, or you have home mortgage interest. If you give a lot to charity, they have some medical and dental expenses. There's some caveats to that. But here are some things that people might deduct if they have more of these than what the standard deduction would allow for that year. I feel like it's easier to learn with an example, so here we go. We got a single filer who has adjusted gross income of $65,000. They have the standard deduction for 2025 of $15,750, or they can itemize their deductions for $10,500. It's not a complicated question here. You want to lower your income by the bigger amount. So we're not going to take the itemized deduction. We are going to take the standard deduction for this tax year at least. When we take our AGI minus the standard deduction, that gets us taxable income. You would then pay federal tax off of that base, and that is what you would do for this situation. If we flip the scenario a little bit, still single, still AGI of $65,000, but now we have itemized deductions of $16,500. Well, now I'm not going to want to take the standard deduction because I can deduct more from my income using itemized. So I would then take AGI minus itemized deductions, and now I have a new taxable income that's a little bit lower, and I would pay federal tax off of that. Few final highlights here. Yes, you can switch back and forth between the standard and itemized year by year. Yes, I want you to hire a professional that can help you out with this, but I want you to understand it because personal finance or finance in general is something you need to know and you can know. And so there's a difference between the standard deduction and itemized deductions, and I want you to know it for your own good. Even if you pay someone else, it's important for you to know. That's what we talked about today. Chris Lee, Everyday Finance, and I will see you guys in the next one.